Good evening, good evening, good evening. I'm on here a little early today. Don't know who all gonna pull up. You know what I'm saying? I'm here early because my children have a football game this evening. My junior plays football, and my freshman plays in the marching band. So I'm lucky enough that they go to the same school. So whenever they have a football game, they're at the same location. So I go to the game, watch both of them, record both of them with my camera, and then I go back to the same school and pick them up. So we got a football game tonight. So I'm on here early in the day. Shout out to SJ for being the first in the chat. What's up, SJ? What's up, Trader Mo? Trader Mo, what you looking at me like that for? What you looking at me like that for, Trader Mo? What you looking at me like that for? Here to learn and share, getting slow with the notifications. Yeah, man. What's happening, Father Legends? Father Legends out there chopping them coming and chopping them going. Posting in the Discord, say, look here, man, I'm out here chopping like I'm hard. Chopping like I'm hard. Chopping them coming and chopping them going. What's up, KC? I'm your boogie, man. That's what I am. What's up, KC? Anna and Elsa. Hello, how are you? Are you being loud in the room with Daddy today? You probably are, because last time you was in the room, Daddy was pooting on YouTube. He said, he said, on YouTube. I heard it. He said, what's up, Mendez? What's going on, Terran? What's up, E-Rock? What's up, Garnell? What's up, Garnell? I'm going to say Garnell. I don't know who this is. I have never seen this name before. And you already know it's American football. Fear the spill. Whoa. Whoa. You know it's American football. You hear me? But welcome to the channel anyway. Welcome to the channel anyway. Today, I want to talk about, let me share my screen. If you have not seen the thumb of the nails, the thumbnail, can y'all hear me okay? I got the mic kind of pushed back today because I'll be like right up on the mic and it's like sometimes when I go back and look at my playback, like I'll be like mad loud, right? I'll be like mad loud, but I appreciate that. Garnell, did I say your name right? Did I say your name right? What are we talking about today? Hey, they lied, Mom. This ICT stuff, it works. It works, Mom. They lied to me. Look at me now. Look at me now. Oh, I'm getting paper. Look at me now. That's what. That entertainment moment was sponsored by Rocky. It was sponsored by Rocky. Hey, this is what we talk about today. We y'all already know what I be saying, man. I be like, gang. Everybody in the gang. You know what I'm saying? Garnell, you say you always quiet when you come in here. I appreciate you coming in with the gray and lavender. I got me some gray and lavender too. I like how you put that together, right? I can't say this name. I ain't gonna try to say it. Appreciate you for hanging out with me. But everybody else that's in here, y'all true blue gang, like Valdez, buenas tardes, right? So you should be very proud of yourself. Why? Why should you be? If You have been following along. This is why I'm gonna say it. Let me right here. I'm E-Rock. I'm finna put you on blast. I be putting E-Rock on blast all the time. I'm put you on blast, E-Rock. I'm excited to see that price went to where I thought it would today. You feel me? You feel me? That's why I say you should be proud. Why should you be proud? Because I used to get on here every single day, but I've been getting on a little bit more frequent lately because when I start talking about something and I see it transpire, I be wanting to just jump back in and be like, see, we talked about it. Do you see it now? Do you believe it now? We talked about it yesterday and it happened today. We talked about it earlier today and it happened this afternoon. We talked about it last week and it happened today. That's why you should be proud of yourself. E-Rock told you. She said, let me read it again in my E-Rock voice. I'm excited to see that the price went to where I thought it would today. You know why? You know why the price went to where she thought it would today? Because they lied, Mom. They lied. This ICT stuff really do work. They lied, Mama. They lied. That's why. That's why. You know what I'm saying? I ain't got no knock against nobody for what you do or what you use. But as for me, in my house, I ain't turned the light on. Why y'all tell me I ain't turned the light on? Hold on, let me get my fancy lights together. Right? Let me get my fancy lights together. Come here, light. Come here, fancy light. Okay, there you go. Let me put my other one up here. Let me put my other fancy light up here. Come here. Whoa. Fancy lights on now. Now, let's go back. Let's get semi-serious for a minute. We're going to go back to the monthly chart, right? On the monthly chart, when we discussified this, right? Every week we discussify the same thing. We talk about what we anticipate, what's going on, right? For the monthly chart, right? This is this month. For the monthly chart, we talked about, hey, we've come down to a monthly discount PD array, right? We said we came down to a monthly discount PD array. It's right there around equilibrium in the discount, right? Once we reach that area, what's up, Laverne? Don't be coming in telling people you're late. Just come in and sit down and be quiet like Garnell. Right? Yeah. So we said once we came to note takers. I just decided just now. Let me turn this way. Now let me turn straight on. Note takers. I just had a thought. Pop quiz. I want to see if you retaining any of this ICT stuff or if you just on here listening and hoping and praying when you get into your trades. Let's see. Okay, pop quiz. Flip through your notes. I hope you got them on digital because I'm fun to go way back on you. Do you remember how we first learned this and we said this and we said that? Okay, do you remember? Right? I'm going to lead you through it before I give you the question. We said we're coming to a discount PD array on the monthly, right? Right? Question number 1. What did we say we anticipate price to do when we came here to this fair value gap? What did we say we anticipate price to do? Go in the chat now. What did we say? It's gonna be, they gonna get, it's gonna be one. I'm gonna see how much you retain it. Don't be talking about Garnell. Don't be talking about you just listening. Don't be talking about you just listening. Come on. It ain't nothing but a 15-second delay. I done ran my mouth for 20 seconds already. I should see something in the chat. I should see something in the chat. What did we say we anticipate price to do when we got to this fair value gap? Pop quiz. We expectify. Put defy. Expectify. How many T's? Expectify price to do at the bullish FVG. And we're just gonna put month in parentheses. Question Marco. Now let me see what y'all said. What was the answers? Let me see. Y'all keep score. Y'all keep your own score on your test now. Question number 1. Let me see. It's gonna feel it. Give yourself now. Nah, that ain't what we give yourself half credit. Give yourself no. Give yourself quarter credit. Cause we ain't said it was gonna feel it. We ain't said it was gonna feel it. Give yourself no, don't give yourself no credit at all. Don't give yourself no credit at all. Right? That ain't what we said. It can feel it, but that ain't what we said. That ain't what we said. I said, what did we expectify price to do? Right? So it can feel it. You're right about saying going to feel it because it can feel it. It's an imbalance, right? But what did we expectify as the spider gang, right? Ridge action on. Here to learn the show. Give yourself some credit for that. You got credit for that. That's correct. Have a reaction. Give yourself credit for that. Lil Hawk. That's correct. Go down. Nope, we didn't expect it to go down. Mean threshold, give yourself credit for that because we said we anticipated maybe getting to mean threshold, then have a reaction, right? Which means we wanted to reject the price, right? It would pull back. Give yourself credit for that. I don't know what we said here, but I anticipate it to at least hit CE, then reverse. That's exactly what we said. Give yourself credit for that, right? It's going to go down to, boy, you better stop now. You better stop. Garnell. Y'all ever seen what the movie was with Richard Pryor and Rich Pryor played Slim and Goldie and golly, what was the name of that? And what was the name of that movie? Had Rich Pryor played Slim, and then light skinned dude played Goldie, and they was pimps. And Goldie ran up on Tony. Pretty Tony was like trying Goldie, and he was like, stick yourself, Tony. Stick yourself. And he was making Tony stick himself. And Rich Pryor and Slim was like, you better stick yourself. You better stick. The Mac. That's it. The Mac. Stick yourself. Stick yourself, Garnell. Stick yourself. Talk about 20%. Stick yourself, Garnell. Hey, look here. Coming to Harlem. Stick yourself again, Garnell. Max Julian. That's his name. Max Julian played Goldie. He was like, stick yourself, Tony. Stick yourself. And Slim was like, you better stick yourself. He got stick yourself, Tony. Okay, now. All right, very good. Keep your own score, right? Now, let's go to the 1 week. Right? We're going to the 1 week. Okay, 1 week. That's good. Now, this what we gonna do. Because the 1 week I really ain't got nothing to ask about the 1 week because it the 1 week was pretty much just like the monthly. It was the same thing. We had come down to discount PD array, and then yeah, thank you, thank you, thank you. Love my screen. All right, there you go. Appreciate that. So the 1 week in the month, we had the same expectations. Now, this right here is the last question on the test, right? You're either gonna pass or you gonna fail, right? So if you got the first one wrong already, you already failed. But do your best on the test and continue to now. Y'all gonna have to dig deep into your ICT notage. Let me go back. Let me go back real quick. Let me go back real quick, right? Go back real quick, right? So on the weekly, right? On the weekly, right? Price came down to our weekly breaker right here, right? On the weekly, last week, price came down to our weekly breaker right there. We anticipated price to, do the same thing. We came down to a discount PD array, right? That's a breaker that's in the discount of this weekly move right here, right? I'm walking y'all through it tick by tick, right? Right? Discount PD array and this move right here, right? If you go from the payout of the move, it's under the 50%. If you go from the lowest portion of this entire price leg, it splits the 50% and the discount, right? So we came to a weekly PD array, right? We anticipated price to retrace, right? We anticipated price to retrace before taking out this low, right? We came in and said, because how the weekly candle closed, we took out the weekly low, right? And we closed near the low, below the low that we had taken out. We anticipate this week, right, that we're in, taking out this low. But what's up, Angela? But we anticipated the retracement first, right? Because if we want to attack the sell side, we want to sell in a premium, right? Let's put the Fibonacci's on here. Now, what? We came up into the premium, right? And now we seem to be attacking the sell side as anticipated. Now, going deep into your notifications, not notifications on YouTube, your notifications from taking notes with the gang. Here's question number 2. What? Come on, Tim. You don't have to capitalize a number. What did Michael, aka ICT, say your exit, how can I word it? your exit target. What did Michael say your exit target should ideally be in relations to your entry multiplier. And your entry multiplier, if you don't know, I'm gonna give you a cheat sheet, is the PD array that you act on, right? Only a 2-question test. You either pass it or you fail it. And if you missed the first one already, just do your best on the second one. 50% better than a 0, right? What did Michael, aka ICT, say your exit target should ideally be in relations to your entry multiplier? And if you don't know what the entry multiplier is, it's the PD array that you enter in on. Now, we came down to a weekly breaker. We got our retracement that we anticipated. For this quiz, the weekly breaker was our entry with anticipation of the retracement. Now, what did Michael say your exit target should ideally be in relations to your entry multiplier? Grab low-hanging fruit of the tree. I hear him say that, something like that. That's a good low-hanging fruit is a good thing, but what is your ideal entry target? Exit target. We entered on this case. I'm trying to help y'all. We entered in this case on a weekly breaker price. And if you didn't enter, that's fine. But price came to a weekly breaker. What would have been our ideal exit? And it's staring at you in front of the charts. If you understand the PD arrays, right? It should give you. It ain't just, it can be liquidity, it can be a fair value gap, but a daily look at here to learn this shit pulling up. Bing, 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 bing. Your ideal exit will be one level down from the entry. That's your ideal exit. Go down a time frame. Previous daily, it can be a daily, it's going to ideally be one level down. That's your ideal exit point. And what did price do today? What is this? What is this right there? What is that right there? What is that right there that green candlation right there? Can someone tell me what that green candlation is right there? What is that? What is that? What is that? If y'all remember yesterday when we was on the live, a daily bearish order block. When we was on the live yesterday, I said we have made a high on a Wednesday. Tuesday is not always the day to make a high. We can make a high on Wednesday and sell off on Thursday and Friday. Now let's see if price wants to come up into this or this daily order block and sell off. The reason why I said that, it was because this is where on the weekly level, let's pull out our homeboy. Let's pull out down here. My homeboy is hanging out right down here. Y'all know what his name is. What is his name? What is his name? Picasso. My homeboy Picasso is hanging out down here on the weekly. So I want to sell. I'm in a premium of price reacting off of a weekly 1 week. It's reacting off of a weekly breaker. You see this line right here? Price reacted off of a weekly breaker. It retraced up into the premium of the week. And when I said I want to see price get to this daily order block and sell off because I want to sell. I want to sell. And guess what I did today? I sold because it was in a premium and it was reacting off of a daily order block after reacting off of a weekly breaker. So, shout out Here to Learn and Share. Shout out Lil Hulk. Right? Those the ones I saw say something before I started talking. Everybody else, thank you for participating. You all get the opportunity to watch the rest of the video. Oh man, that was fun. That was fun. That was fun. Now, let's get halfway serious for a minute. If you've been tuning in and you've been in tune with what we've been talking about, pat yourself on the back. Pat yourself on the back. Pat yourself on the back. As you see, let me see when the week started. New week opening gaps. New week opening gaps right there. There you go. Okay. So we started here on the week, right? We started there on the week. Okay. So we got our retracement as we wanted, right? We got our retracement as we wanted, right? We got to a daily order block, right? And we pulled back down, right? Heading toward Picasso, right? Going toward Picasso. Now, do we need to hit Picasso to be profitable? No, we don't. Shout out Tommy that just pulled up in the chat. What's up, Tommy? Right? Do we have to run up in Picasso's house to be right? I mean, to be profitable? No. Do we care if we hit Picasso? No, we don't. Only thing we care about is trading what we see. The only thing we care about is watching price to respond algorithmically so that we can respond by executing our entry models, whether it be long, whether it be short. We don't care about being right. We don't care about being wrong. Only thing we care about is following the rules of our trading model, right? That's all we care about, following the rules of our trading model. We can get together every day of the week and talk about what we anticipate in price, but if we do not execute, it's pointless. If we do not execute, it's pointless. You don't have to be executing in a live account. And please, if you're not executing in a live account and you're still paper trading, you're still sim trading, you're still whatever you want to call it, using monopoly money, please don't get FOMO for the gang members that's actually doing it in live accounts, because your day will come. Your day will come when you will start trading with live funds, but do not start trading with live funds until you are ready. But the more time you take to understand how to read this price action, the more comfortable you will be with executing your model, because you know, shout out E-Rock. E-Rock is very honest saying, I still lack the confidence to hold the trades. I can see where price is going to go, but when I get in, I still lack the confidence. Everybody goes through that. Everybody goes through that, right? But the more you do it, you have to condition yourself to not be afraid of the stop out. You have to condition yourself to not care about the money aspect of it. You have to condition yourself to make your model a mechanical thing for you. Like you want to be an algorithm. The algorithm is going to do what it's supposed to do no matter what. So you have to do what your model says do no matter what. If your model says wait until this time frame of liquidity has been taken and retraced back to a breaker, then enter, that's all you do. If your model says as soon as hourly liquidity gets swept, enter long or short, below a low or above a high, that's what you do. Whatever your model says that you have practiced, say, do it over and over without fail, right? Don't, when you're trading ICT concepts, don't go out here and listen to these people that say, oh, y'all sound stupid saying I'm going to wait to a kill zone to execute. Y'all sound stupid saying if I take a loss, I'm going to reduce my size and get back in. Y'all trade the concepts as they were taught. That's how they work. Don't be trying to mix stuff together. If you're going to trade the ICT concepts, right? Just like anything. Why you think when you go to the store, they got all these hair care products, they all do the same thing. But when we go in there, we get all the same name brand. Even stuff for my beard. All the same name brand. You got the shampoo, you got the oil, you got the beard butter, you got the pomade or whatever. You got all this stuff, and I got all the same name brand. Right? My kids bought me some for Christmas. It was a total different brand. The brand that I was using, I set it to the side until I used up all the same name brand that I ain't mix it. So don't mix it. Keep it all together. Just keep all the ICT stuff together. Right now, do we anticipate this taking out this low? Yes, we do. Why? Can somebody tell me in the chat why we anticipate price taking out this low right here? Some Thursday night football, that's right. Can somebody tell me in the chat why we anticipate price taking out this low right here? Go. Right? I'm gonna cycle through the different time frames. 1 day. Right? 1 day. 1 day. This 1 day. I'm giving y'all a chance to look at the charts for a minute. That's the 1 day. That's enough time. 4 hour. 4 hour. 4 hour. 4 hour. 4 hour. Doug it fresh and you're on. That's enough time. 1 hour. We don't need to go any lower than this. Right? Now, yes, I've run out of meds, Kev. Okay, so now it's the draw. That's partly, but we already said that was the draw, right? We already said that was the draw, and we already know price does not have to get to the draw. But now we're at the point where we're saying, okay, price may take it out, right? Price may take it out. Now, what in the price is supporting taking it out? Low week draw, same thing. Draw on liquidity, same thing. Bottom leg of that bottom of the leg that sent us up. That's cool. That's still the draw. Liquidity, yeah, we know there's liquidity down there. Opposite end of the run, that same thing. S, okay. Because order flow is bearish with the time frame. Ding ding da ding ding a ding a ding 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 a ding ding a ding ding a ding a ding ding ding. Clap it up for Mr. Stir. Stir. Clap it up for Mr. Stir. Because the order flow is bearish on all of those time frames that I just showed you. Every time frame that I just showed you, the order flow has switched bearish. Does it mean that it will take it out? No, it don't mean it, but that is what's giving us our bias that we will take that low out, because the order flow has switched bearish. Let's go back to the daily. Let's go back to the daily. One day, what? Uh-oh, what did I hit? One day, can y'all still hear me? Can everybody still hear me? Check, 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 check. I hit something, it did something funny. Right? One day. Y'all can still hear me? Let me know. Let me know in the chat. Can y'all still hear me? I don't want to be talking and y'all can't hear me no more. I did something crazy. Yes, thank you, Deborah. Okay, so on the daily, right? We went up, right? Rejected off of the order block, right? Came down, we took out buy side, came down. I mean, yes, took out sell side, closed well below sell side, and we totally disrespected this candle right here that should have been supporting price if the order flow was still bullish. If order flow is bullish, right, and we make a move like this, you want to see the down close candles support price. So now we have shifted to a bearish order flow on that. When we broke through the open of that candle right there, they call that the change in the state of delivery for the note takers. If you are a note taker, when we broke through the opening of this daily candle right here, after disrespecting this down close candle, they call that the change in the state of delivery. Of delivery. So now, if price was to go back up, you anticipate this candle to act as a bearish order block. Right? 4 hour. 4 hour. On the 4 hour. On the 4 hour. Right? We came up to a point of anticipated resistance. We went down and then we went up, right? So that state of change in these red candles was an order block. But we did not stop, and we bust through and broke the sell side, and we closed below. So we have a break in market structure to the downside and a change in the state of delivery. So now if price come back up, you anticipate this bullish order block to act as a bearish breaker. We have changed the state of delivery. We have changed to a bearish order flow on the 4-hour. So now the daily and the 4-hour are bearish, right? Will we take these lows out tomorrow? I don't freaking know and don't care. But the change in the order flow is now bearish on the daily and on the 4-hour, right? And the 1-hour, the order flow is bearish. We came down, breaking market structure, closed below the low that took out these highs over here, breaking market structure bearishly, right? So the order flow on the hourly is bearish. So if the order flow on the daily is bearish, the 4-hour is bearish, the hourly is bearish, you're anticipating taking out liquidity. Where does the liquidity reside? Down here, right? This is the daily chart. This is the daily chart. The liquidity resides down here. This is the 4-hour chart. This is the 4-hour chart, right? The liquidity resides down here. We got some short-term liquidity right there. Some short-term liquidity, but the liquidity pool down here. There is some liquidity here because when we took off like that, someone moved their stop there. Someone moved their stop there, right? When we took off like this, someone moved their stop there. We came down, we took off again. They got happy, they moved their stop there. So a lot of them got taken out there. Some of them are still resting here, but the majority of them is still down here. Still down here. Still down here. Right? So that's where the liquidity resides. Will we get there tomorrow? I don't freaking know. Gonna let the chart tell us what it wants to do. Right? We got a humongous 4-hour fair value gap up here. Right? Let's see where that resides. Right? We just took liquidity and we closed below it. Right? So we're not anticipating a run back to this imbalance just yet because we took out the liquidity here and we displaced below it, right? So we're still looking down for liquidity to take. Once we hit some liquidity on the 4-hour and we reject it, then we will start to look for an imbalance above that rejection for us to draw back into. Right? Let me say that S on any time frame. Any time frame. Any time frame. Any time frame. That repetitive moment was brought to you by Rocky. Just for you, Rocky. Now, does everybody understand that? Right? One hour. Right? So we come down below this here. Now we got an hourly fair value gap up there in that same area as that 4-hour, right? Set an order block there, right? And now we got another fair value gap right here, right? So now we've come down to the weekly new week opening gap, right? We come down to a weekly new week opening gap. We've come down into this order block over here, right? Right? So if we take out this low right here, we can reasonably expect us to draw into this SIBI before attacking that. Or we could just, if we displace below that, look out below. And why is that? Because if we come and take out this liquidity here, right? If we come there into that liquidification, right? Take that out and reject it, right? we can very well come back into this imbalance before hitting that. And why is that? Because this liquidification area right here, this SIBI right there, that SIBI right there would be in, we'll just come to the low of this right here, right there, right? Would be in the premium of this price run that rejects off of this low. So if we come down and reject off of this low, right, we can anticipate price coming back into this SIBI right here, right? Maybe even hit this breaker, right? Maybe even hit that breaker and then attack those lows. But if we come down and take out these lows and displace below it like this, we can anticipate us just to slide on into home plate. Right there. Right there. Right there. And on the 4 hour, same thing. If we reject off of the 4 hour, right, we can anticipate price coming back up. Right? There's an imbalance. There's a breaker. And slide into home plate. Right? Slide into home plate. It's funny how we look for all these different things and end up using one ICT model consistently. That's what you're supposed to do. You're supposed to use one. You just think about all the stuff you know as a doctor. When your patients come in, you don't give them all of the stuff that you know in your head to get better. You use all your vast knowledge and you prescribe them one piece of medicine to fix that problem. Maybe two. But you don't go in, tell them to get knee surgery because they got a sore throat. But you use all your knowledge to let them know. Look, man. Look, man, I know that, man. Look, man, I know that, man. Doc, you drunk yet? What time is it? What time is it in Texas? You drunk? You asking me about a rejection block? Yes, that can act as a rejection block. Yes. Do you anticipate price to reject there? I'm glad you asked that question. Do you anticipate price to reject there? How would you utilize a rejection block? The same way you utilize any other PD array. You anticipate price to do something at that specific point. At that specific point. So, if you were bullish, right, and price was coming down into a potential rejection block, and it had just taken out sell side liquidity, you would be anticipating buying once we clear the bodies. Come here. Come here. Clicky click clicking. Once you clear the bodies of these candles right here. If the order flow was, if the order flow was a bullish order flow on the higher time frame, and you anticipating price to be bullish, and we had just taken out some liquidity on this time frame right here and was coming back down into a rejection block, you would anticipate price to not make it to that low. You would anticipate price to hit the rejection block and get out of here. Still in the office. All right, man. That's all I got, man. We did a little pop quiz. Everybody did fantabulous. Pat yourself on the back. Everybody got a 100 on the pop quiz. I'm so proud of y'all. Everybody got a 100 on the pop quiz. We so smart over here in the gang. Everybody got a 100 on the pop quiz. Clap it up for yourself. Then we talked about, looking at what the price is telling us. We talked about anticipate taking out this low. We talked about the potential headwinds with rejecting off of lows, and if we reject off the lows, what we be looking for. You're just none of your business what I'm doing. I look for opportunities to trade every day. I look for an opportunity to trade every day. But I don't, on Fridays, I don't force anything. If it's not overwhelmingly, I love news days. I'm not afraid of news. I love news days. You know why I love news days? Because I let the news inject the volatility, and then I look at price to see what's left for me to come and clean up. I love news days. News days are my favorite. Does every news day offer me an opportunity to get into a trade? No, it doesn't. But news days offer volatility. And volatility for a day trader in futures is essential. It helps you get to your profit target a lot quicker. Thank you, news days. So, and I don't care who's speaking. I don't care if it's Powell or Monkey in the Moon. If it will inject volatility, bring it on. I just need to know the time of that injection so I can not be in a trade at that time. So, if the market affords me an opportunity to take a trade, I probably will. But on Fridays, it has to be super duper uber. It's just got to be so one-sided. Because Friday is my day where I try not to give back any of the profits that I made, or I try not to incur any more losses. If I'm down on the week, I just don't trade on Friday at all. If I'm up on the week, I'm very selective with the trades that I take. That's just how I do. Because I don't like going into the weekend off a loss. It hurts me to my core. If I go into the weekend on a loss, I'm just sensitive like that. You feel me? You feel me? All right. Let's look at the weekly calendar before we get out of here. Hoo-wee. Look at that thing there. Hoo-wee. That is one long week. That is one long week right there. That is one long week. Now, let's keep this stuff in mind. You always want to know both sides of the coin, even though, you're pretty convinced of what's going to happen. Always keep both sides of the coin in mind, right? So, the monthly, we said was bullish, right? The monthly is bullish. We anticipated the monthly to come back into this monthly fair value gap. We got down to consequent encroachment, right? If it's exceedingly bullish, we don't want the month of August to close below this consequent encroachment. We want it to close above this consequent encroachment if it's exceedingly bullish, right? We've come to the consequent encroachment and we're reacting up. We're getting, this retracement, we're getting a reaction off of the retracement, right? Go to our weekly candles. On the weekly candles, right? We came down, right? And we hit this weekly breaker, right? We hit a weekly breaker. Remember, we came into a monthly fair value gap, and then we went back up, right? When we went back up, We hit this daily order block, and we hit a weekly new week opening gap right there, right? We hit this weekly new week opening gap right there. And then price started coming back down. Where did price come back down to? Now we're looking at the other side of the coin. We already liquefied into taking out these lows. Now we're looking at the other side of the coin. The antagonist, if you will, or it might be the protagonist if you're not in the mindset that Picasso lives down here and you're waiting on come here. God dog it. And you're waiting on Picasso up here. Right? Where did price come back to? Let us see. Right. This is a weekly candles. Boom, 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 boom. And let me hide this other stuff. All right, I'm gonna hide everything. Just about everything. Just about everything. Just about everything. Right. So we came down to this fair value gap. Monthly gap. Not gonna extend it to the right. Not tonight. Okay. Weekly. Now. We came down and we took out that low. We rejected and we got a long wick. 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 There you go. And we got a long wick. So, if you are in the mind frame of coming to Picasso up here, what has price done for you? Price has come down into a price has come down into a potential rejection block. And it also came down below the weekly open. So if you understand the power of 3 and you're looking for the draw to be up here, you will open, go up, come below open, and go up. You will open and go up, come below open, then go up. Now I know everybody sitting there like, Tim, why did you say that? You have ruinified my whole bias. And now I don't even want to trade tomorrow because I'm scared. I don't know what to do. You just showed me both sides of the equation. You showed me what we can do either way. And why am I able to do that? Because we've been having so much freaking divergence in the candles. Look at the ES, NQ, and the Dow. Look at the divergence. Look at the charts. They don't look the same. These two look the same, but what is the Dow doing? The Dow is doing something totally different, man. The Dow just ran out sell side right here. Right, see the sell side? Look at this sell side. But look how far away the NQ is. Look how far away the ES is. That's looking freaking bullish, man. It's looking bullish. I want Picasso to be up there, man. Hey, man. Hey, always understand both sides of the coin, right? And trade what you see. Let price show you what it wants to do. Just like yesterday, when I wanted to, God dog it. Like yesterday, when I wanted to sell, right? I sold during the London, but during the New York, nothing could stop me. It was all the way up. I didn't get an opportunity to sell, and it didn't give me an opportunity to buy because during the time that I traded, it just kept going. So I couldn't do nothing during the New York session in the morning or the afternoon. Couldn't do anything, right? Today, I wanted to sell. Why did I want to sell? Because my draw Picasso is down here, right? It's down there. My Picasso is down there. That's why I've been looking for reasons to sell. Do I have to hit my Picasso to be profitable? No. And if price tomorrow doesn't give me a clear indication that it wants to continue down and get to Picasso down here, I could care less. If it gives me a unparalleled, unmatched opportunity to go long, I will. But it has to be very, 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 very clear that I need to be going long because I'm bearish on the week and I'm looking for reasons to sell. It's Friday and I'm ready to play. Hit my homeboys and hit the party scene tonight. Plus, we took out the previous day's high and low. Yep. Cleared everybody off the board. Made a clean slate for Jay Powell to come in and do his thing. Clean slate. Knocked out buy side, knocked out sell side. Clean slate for Jay Powell to come in. I appreciate you, E-Rock. I appreciate Father Legend. I appreciate Scripture. I appreciate you, Doc. I appreciate you, Lil Hawk. I appreciate you. I said Father Legends, get out the way. I appreciate you, Deborah. I sometimes appreciate you, Kev. I appreciate you, Sammy. I love you, baby. Kev, I said what's up. I appreciate you, Laverne. I appreciate you, Calio. I appreciate. Hold on. I appreciate you. I said Deborah. Get off my screen. I love you again, baby. I appreciate you, Robinson. Who else on here? I appreciate you, Angela. I appreciate you, Garnell. Who else on here? That's it. I appreciate you, SJ. I appreciate you, Taryn. I appreciate you, Mendez. Appreciate you, Trader Mo. Appreciate all y'all, man. Y'all clap it up for yourself for getting that 100 on the quiz. Hey, man, if this is your first time tuning in to Tim's Tidbit and you feel like Rocket Field, it's a rectangular shaped thing. Oh, wait a minute. Coochie. It's a rectangular thing over here with a gold round spherical object towards the middle of it, slightly below middle. If you turn it, it will open up and you can exit. For everybody else, hey man, take advantage of the day. Let your loved ones know that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. Right? My camera catching the side of my monitor. Say it, show it, and confirm it. Speaking their love language so they can receive the love you're trying to give to them. Don't live with the regret of not letting the loved ones know that you love them while you got the chance now. Because ain't nobody promised tomorrow. Not me, not you, not anybody. Right? Don't be wanting to end it on a down note. I just want to end it on a realistic note because we're here trying to change our family's future. Right? And what's the point of trying to change our family's future if we're not enjoying and loving them right now? Right? You want that future to be great in their here and now to be bleh? No. Let the here and now be great and the future be greater. You feel me? That's all I got, man. I appreciate y'all. Till the next time I decide to jump on Al Gore's internet, y'all be safe. Go out there right now. Hug your spouse, hug your kids. Love on them. Go by your parents' house. Go see your mom. Take her trash out. Go wash her car for her. Go by see your dad. Say, hey, what's going on? How you doing? Call up your adult kids. Let them know that you're thinking about them. Till the next time, man. Big Spider gone.